Hello again, everybody, and welcome back to the Accelerator with Michael Conniff. That's me. This is a podcast dedicated to entrepreneurs, founders, startups, and the angels, VCs, family offices, and investment firms who serve them. It's great to be here today, and in particular with Edwin Mata, who comes to us from Bricken in Barcelona, Spain. Do I have that right, Edwin?
Yes, completely. Barcelona, Spain
And
is where I'm currently
and
located.
you're originally from Mexico, is that right?
Originally.
The original. I've actually done Mexican podcasts back to back.
Oh, nice.
Oddly enough, but without for the first time doing any Mexicans on the show. So it's great to have you. And you are a person that we have so much to talk about. I feel like here's a subject where here's what I bring to the table. Pretty much absolutely nothing. I'm going to be as dumb as I can be on this one because we're going to be talking about Bitcoins and tokens. You have a token company. That's maybe one way to describe it. But I wanted to start today, Edwin, by talking a little bit about what's going on in the markets. We usually don't get very involved in it, but there's no doubt that tech companies, famous companies are taking it on the chin, and so is Bitcoin and companies related to that industry. So I think it'd be very useful to hear how you would analyze what's going on, and then what you think people should do about it, if anything.
Yeah, perfect. I mean, I think when we experienced it, it was meant to happen. The last 2 years, or maybe it comes even from before, but especially during COVID, a lot of the companies saw an uptick on the revenues, be using blockchain, not blockchain, or anything. I mean, literally, there were countries that couldn't deliver or couldn't get out, so delivery companies just blew up. Here in Spain, there was a valuation of a 2 billion company who has crashed 50% the last year just because people stopped ordering because they could. Well, same thing happened with all these tech companies, Zoom, DocuSign, Twilio infrastructure. So in that sense, it's like we were living in a big bubble because people were not coming out, so they were doing everything remotely, so they were using all these tech services, and that's why they got hit. Because once you start going back to certain normality, well, these things were going to happen. And cryptocurrency was not other than another one, because if you were home and couldn't do anything, you would say like, okay, why don't I buy? I'm not spending in eating. I'm not spending going to the movie theaters or even going to a bar with friends. So it's like, okay, I have a little bit more. Why don't I? Yeah, why don't I go jump into cryptocurrency? So I think it was just a big hit. What happened because the valuation of companies were off the roof. Everybody was doing an IPO. SPACs were coming out. Cryptocurrencies were going like crazy. And I think the momentum obviously has to die. There's not enough money out there to continue feeding not just one well or one country, just every out there. So I do believe right now it was meant to happen. I mean, I
Hmm.
really think so.
So a correction at the very least. Now,
Correction, yes.
tell us about Bricken. And I know you're a lawyer, and I know that you come at this in many respects as a lawyer. We tend to forget that the blockchain includes a smart contract, and if you hear the word contract, you have to think of the word lawyer. But first, tell us how you kind of found your way to this space as a lawyer, to the token space as an attorney. What brought you here?
I've been always curious about technology. Even when I was young, I always had this like I was playing a lot with the computer, building things, and I always like it. I really like it. I mean, I was in a generation where even like video games was a door to future digitization and all that. So in that sense, when I became a lawyer, I was doing M&A, so I was super corporate, working for restructuring of companies. And I had the shot with a client on doing some things related to tech. And it made me really curious because curiosity, I've always been curious about what technology brings on, not just how you use it, but how is it going to evolve and how all humans are going to be interactive now that everything is digital. So I was like, oh, I really like it because they were playing with digital signatures and identity. So like I'm being very curious about what's happening in this field. And it was super legal. It was called legal tech. So it was like they wanted to amplify some legal scope with technology. So I was like, oh, this is probably what is me for me because I like legal and I like tech. So I might jump into the legal tech sector. So that's basically how I got the shot working as a head of legal at the department. It was called back, well, still called Signature, which is the biggest competitor of DocuSign in Europe. And they had an R&D department. Since I was also curious about production, it's just like one product can always evolve and we can build add-ons. So you always have to see like once product stays the same, then you all have all competitors who will compete with you at the same. So it was like how what is the next big shot? So for me it was smart contracts actually. So I started analyzing how smart contracts could also help the legal world's execution, automatization, reduce barriers, optimize efficiency. And I was curious at looking at all of that. And that's basically how I entered the blockchain world 2016.
Now, let me ask you this. Take us, maybe go a little more slowly for us. So, explain from a lawyer's perspective, um, what is the blockchain? What is the smart contract? What is cryptocurrency?
Yes, I mean, they call it everything decentralized. It's basically on how it's built. All systems right now, the currently are out there at use, they're centralized. They belong to a single entity. So it's always a single entity, a single point of failure, a single database. I mean, that's normal. It's a centralized. One owns the application, and they can do as they want because they are the one, the authority, right? So then they bring this concept of decentralization. Instead of having one single entity, you distribute that among different nodes. It's a network, and that's why they call it decentralized network because now you have different entities working for the same output, but they all share the network goods, flows, and everything. So it's a decentralized. It's more like an organism. So that's the main difference between a centralized entity, which it really it's every single company out there, and then decentralized, which is they are all looking for that how to share network, how to create that more of an ecosystem instead of just a single output. And that's basically how you run that decentralization. Well, you use smart contracts in some of the blockchains, which is basically
All right,
everything.
hang on one
Go
second. So,
just
what is a blockchain? What is a blockchain?
So a blockchain is just a distribution of nodes. It has to be related to a database or compared to a ledger. So you have an open ledger where all the transactions that occur are stored in that open ledger.
Okay.
So that makes it transparent because everybody can see what is happening at every single point of time, and they can all access the same point of time in different aspects. For example, you can be in Mexico, in my case, you can be in Canada, but all information that happens in that layer, everybody has the same access, the same knowledge, and so it's super transparent. Added that it's immutable, meaning nobody can modify that because the layer it's written in a code that, and then how it's built the blockchain. It's basically almost near impossible to really break that layer to modify data inside
And where does
the layer.
the smart contract come in?
The smart contracts is how you execute the transactions in these ledgers. So basically, for example, if you want to build a transaction that you have to put in this massive open ledger, you execute a smart contract in the sense that I want to buy something, for example, I want to trade even Ethereum or something. All of those transactions are smart contracts because it's code in the sense that A to B is a transmission, it's smart contract executed, and it gets embedded into the blockchain. But now smart contracts are getting more complex because you can put more variables. Scroll accounts can be built on the blockchain, uh, delaying transmissions. There's so many possibilities that right now all of that just makes it the ledger more optimal since the beginning. It's just not just for handling accounts. You can even do payments in the future. Put variables that if something happens in the future, then B executes, and all of that is just because it's smart contract. It's code. It's binary 1010.
It sounds like that would be very good for this will be very good for lawyers because it's just more contracts and that's when lawyers typically come in. Is that fair?
Absolutely. I think there's a misconception out there in the ecosystem that says that A lawyer and a smart contract are antitheses in the sense that one understands the law and the other one executes a code, and those don't relate. And I think it's wrong because lawyers, as myself, we need this optimization because then we do work at the interpretation level. But whatever is just a fix A to B or B to C or something like that, then we don't have to worry about that. It's already embedded in the code, so we just have to go fix the more intense things because us lawyers, I mean, I'm a lawyer and I know I have many friends that are lawyers, and they all work on almost the same templates, almost kind of like a share purchase agreement. Yeah, they modify two, three clauses, but the rest, it's always a template. So they're kind of using smart contracts in the sense that they're using a template and they just modifying what they think it's important or the client's output. But the rest is basically what you want to optimize. You don't want to worry about the thousand clauses that are always the same.
And now I want to really zero in with Edwin Mata of Bricken in Barcelona, a lawyer whose company really specializes in tokens and tokenization. And I think that many people could tell you what the blockchain is. Many people could tell you what a smart contract is, a ledger, and cryptocurrency. I am not sure the tokens are particularly well understood. So give us a very simple definition, and then I know it's going to get complex in terms of how you can use them. But I think let's start with just a very simple definition, explanation of how tokens fit into the blockchain and into cryptocurrency.
Yeah, I mean, I think the definition of token itself is basically the representation of something. That's the most simple definition of what a token is. And in reality, we've been using tokens for the longest of times. Just that we just didn't know that that was a token because the blockchain, what they did is they used certain words out there and then they made it their own. And people think like, oh yeah, tokens all exist in the blockchain. That's a complete misconception. Credit cards are tokens. Hotel cards are tokens. Casino chips are tokens. They represent something that provides access to a product or service. And they've been there for the
Okay.
longest time. I go to a casino, I go with $1,000. The casino gives me chips that represent my $1,000. I go with those casino chips inside and start playing blackjack if I want. But they don't play. I don't play with $1,000. I play with $1,000 being represented by the tokens that they gave me. They
Okay.
actually
So
give me
so this
casino chips with
is
our tokens.
so give us a real world example, and I think maybe if we stick to real estate, then that'll help in terms of the real world. But give us an example of the tokenization of real estate.
Yeah. So with that conception that it's a representation, now buildings have for real estate have a value. So let's make it simple. Let's have a building that is $1 million. Perfect. That can you can use fiat money, which is obviously normal, but that it says that it's a thousand. It's easy. It's convertible. It's easier to represent $1 million in whatever format you want. You can also digitize that amount and put it into the blockchain, which is what is called tokenization. Is that building ceases its originality form or its physical form and is transformed into its digital format. And again, if we think about the casino chip scenario, now that building gets represented in
Well,
tokens.
let me
So
ask
you
you.
have 1 billion.
Let me ask you this. Probably a dumb question, but the casino example is you take a physical asset, which is cash or money, and you get in exchange chips, which are also a physical asset. So what's happened?
Correct.
What's difficult about this is um, you have. Let's take an apartment building. Why don't you walk us through how a developer would use tokens to develop a building or to generate capital for a building? How would that actually work?
Yeah, definitely. So, I mean, in the sense that tokenization and how we're using it, it's always about money. No, it's the translation of what is going to occur or how you're going to get funded or finance all of those. So, a promoter already has a business plan that he probably developed. Let's say the perfect promoter already has everything established and knows what is the value of what he wants or what he needs. and what is going to be the flip, let's say, because they all do the flip. They all want to build cheap, sell expensive, obviously, because that's where the money comes from for them. So with that business plan, they have various outputs. They can go to the bank. Let's see if they give you a line of credit for development. They can go to family offices, to BCs, or whatever. With tokenization, what is happening is you can still go to the same because it doesn't matter. Tokenization is open forward, but you get the open to the retail investor because the retail investor now can invest $1, 3, 5, 6, 10. It doesn't matter. You will need mass, but it can also amplify your scope. So instead of you having one door, two doors, now you have 100 doors to knock and open. Because the game is always going to be the same. It's just that you are digitizing something and put it into tokens. But every
Okay,
token
but
has equal rights and equal value.
that's the thing. So what are you digitizing? You're digitizing essentially the value of the property.
Yes.
Okay, so you're digitizing, let's say, part of the value of the property. You're issuing tokens that represent part of the value of the property, right? Now, why would a developer want to do that?
I mean, it's basically just a new form of funding. So it's not that they're gonna choose this over another aspect. No, it's just that they can create new business models on top of this possibility because now they have engaged with a new player, which is the mass player out there, which is the retail. I mean, yes, VCs have all the money and family offices, and we talk about Wall Street and brokers, but we forget that the retail has $5, $10 in their pockets on a daily basis, probably. It all depends on the countries and all that. I'm just being here with example. So if you join 100 people that have €100 that invest in a month, I mean, you already have a ticket. So it's all about that. It's not that it's gonna be the only new form of funding. No, because even with tokenization, you may want to invite the VC or the family office or your friend, and then it will be the same process because once you tokenize and digitize, it also becomes easier to maneuver and manage because of the smart contracts. Why is that? Because you shoot the tokens to the buyers and sellers, or to all the buyers, and they know that the blockchain, since it's a layer, you know who owns the token. So it's also easier to distribute every dividend or interest depending on the business model. Why? Because the same smart contract will chase those tokens around the blockchain and pay it to the guy having that token. So it's optimization in the end, tokenization. We are not here to replace standard models of financing because the only standard is the bank. This is the first form of funding that has ever existed. What we're trying to do here is optimize even all those certain funds where they have to go sign a contract. And if you want to get out of the contract, you need to go on a peer to peer and then redo another contract and another contract. All of those things, remember that what I was explaining at the beginning, I was saying they use almost the same clauses and the same logic. You optimize that, and then you have an ecosystem which is just deploy. I buy a token, and in 1 month, automatically I get my interest, and I don't have to do anything. And the promoter doesn't have to do anything as well, except feed to the let's say like the main bank account and say like pay. That's it.
Yeah.
Doesn't have to go one by yeah, let me do your transfer. Let me call you. The bank does it 48 hours. No, in 2 seconds, the smart contract shows the payments, and everybody feels happy. It's like, okay, same day, I get my interest paid today.
Now, Edwin, I wouldn't be a very good host if I didn't give you lots of time to talk about your company. So, your company is Bricken, and as I understand it, you help companies with the tokenization of products, with the tokenization of assets. But let me give you the opportunity to explain what you do at Bricken and why you decided to start this company.
Yes. So thanks for that, Michael. Honestly, for me, more than Bricken, no, okay, Bricken for me is my ideal, my dream, right? But there's a reason for this dream. It's because I used to work in M&A, so I was doing this restructuring of companies, and I now I think, but back in the day, I was like, it was such a pain, and I do remember weeks to get anything done, incorporate a company, and distribute the shares, get all those signings, the term sheets, the MOs.
All,
It was
all,
just crazy.
all paper, right? All paper.
Yeah, because when I started electronic signature, yeah, we had DocuSign, which was already making long waves of innovation in kind of that. But in Europe, everybody was like, no, electronic signature, that's not even legal. So you had to send all the paper contracts to all the clients. And if one was not in Europe, you had to do DHL overnight because you needed the signature the next day. So I remember all of that. And yeah, we became more efficient because at least now you have electronic signatures and emails mass adopted and everything, but still it's a big pain. So what we're trying to do is transform all those equities and all those forms of governance into tokens because you can represent absolutely everything you want. So what we're trying, or at least yeah, I'm going to say personally because this is how I thought of the idea. I was like, it's just about improving efficiency on how the companies are formed, they get raised, how they vote. Because everybody's a shareholder. Yeah, I have shares in Nasdaq, but I've never voted. I've never been invited. I'm probably like a class B or C if I'm lucky. But I also did some investment in startups, and they never called me to do the shareholders meeting, and that's an obligation on their side. And why they don't do that is just because they don't even know how to manage a company because it's so inefficient for them that if you provide that kind of like mechanisms of automatizations and efficiency, then it's going to be easier even to communicate with your investors and provide information. Hey, we're going to vote about something like this. Let's go for that. So, Bricken for me is just a tool for innovating companies. So we call it bringing equity on chain. And what we want to do is create a protocol where companies get transformed into tokens, tokens get distributed. You can get now phantom shares if you want, easier employee stock options, easier. It's just efficiency what we're trying to build here.
So give me an example, maybe a company that you're aware of that's already doing this.
Yeah, we have a lot of proof of concepts now. We're getting ready to deploy our new dashboard and platform that we've been developing for over a year because we've been out there asking and requesting, hey, why don't we do proof of concept just to see how was the movement of the tokens and what the investors, what the VCs in the back will think, because we are kind of like disrupting too much on certain control aspects. So right now, one of the key components of what we're doing is bringing the retail. So we are crowdfunding, yes, Kickstarter, biggest crowdfunding out there. I mean, yeah, since I don't know if it was 2014, I think. They disrupt the market of being able to finance your projects. What we're doing is not different from them. It's just that we are in the Web3 because Kickstarter it's a single point of failure, an entity. In that sense, oh, I think it froze a little bit. Sorry, Michael. My internet could be. Am I back?
You're back, yes.
Sorry about that. So Kickstarter, it's a single entity. It's a centralized entity. If you invest in Kickstarter, it's very hard for you to get out because your ecosystem is based on that silo of data, just Kickstarter. So when you bring the blockchain, it gets distributed among everything on the decentralized network, and that's why it's decentralized. So one of the things that we really enjoy and with the proof of concept is just the easiness of transfer tokens that represent shares in that secondary market, peer to peer, or all these automated protocols, which is bringing more liquidity and more easiness to move around if you want to stay, you want to leave, but also for companies to issue more tokens to get more funding. They don't have to wait anymore for the 6 month. I'm gonna begin my roadshow. I enter at the valuation of
Yeah.
100K.
Yeah.
So again, it's just pure efficiency. So what we're liking is that it's just that we are just providing more efficiency for companies
So let
to
me
get raised
let
and
me
distribute.
Edwin. We're talking to Edwin Mata of Bricken about tokenizing things, tokenization. Now let's drill down. So on the one hand, you mentioned Kickstarter, which is a crowdfunding platform, centralized, and you called it a silo. I think that's accurate. How would How would somebody do a Kickstarter type thing using Bitcoin, using the blockchain? How using tokens? How would that work?
Yeah,
There's no markets for that now, right? There's no marketplace for that, right?
no, they're actually being built. They even have stocks changes. No, well, let's say blockchain security token markets. I don't know. I just invented. I just confused, but they're legal. They got a license, and you can transact
It's
security
brand new though.
tokens.
It's brand new, right? So
Yeah, it's super brand new.
so it's more like theoretical that you, if you wanted to, rather than go to a crowdfunding source or rather than go to angels, you issue a bunch of tokens, and you sell the tokens to investors, and investors can, correct me if I'm wrong, but can profit on the tokens just as they would profit on a on shares of a stock, correct?
Yeah,
Or
it's the
they
same
can
theory.
also lose. They can also lose money.
Of course. Yeah, of course. It's exactly the same.
We can't.
It's the same concept.
Right. So, how? Give me an example of something you're doing now with a customer that you consider an unusual use of tokens.
Yeah, so basically, we have a tokenization coming up, most likely end of the month, which is we are creating a new company on top of an existing company where we're gonna put all the investors. So it's kind of like a syndication. We're gonna create a syndicate of investors, and those syndicate, since it's what they wanna, we want what they wanna do is it, it's a delivery startup. They already got raised and they're well established, but what they want to amplify is that the client or potential client also becomes an investor, and the investor becomes a client.
And that's similar.
Because one of
That's
the
like that's what crowdfunding is like, where you actually use it to identify your customers, not just your investors.
exactly,
Yeah.
exactly. But with the tech being a little bit more decentralized, for example, if I buy in Kickstart, I only exist in Kickstart. And if I want to communicate with the company, I would probably even have to register through the company, and the company would probably even know that I'm an investor because the databases do not converge. They all exist in their own little silo. So this is one of the things that you move forward when you do tokenization, because the company knows who's the investor and who's the client because they already have all the data. It's theirs, and it's in the blockchain. So you can provide a new layer of products and services to your investors, saying, "Hey, you invest in me, I'll give you 20% or free service fee. You don't have to pay for the writer for 1 year." You start incentivizing that the investor becomes your client, because I mean, one thing is certain: if you're an investor, for example, myself, I don't know if this example was to anyone, but I've never invested in Apple. Why? Because I don't even use iPhone or Mac. But maybe if I had my home with Mac and Apple, I would say I'm gonna invest in them, because you usually use services and you want to invest. I invested in Netflix during the pandemic. Why? Because I was watching Netflix a lot because I couldn't do anything. So I was like, this is it. So that thought is what can really create new business model and new models of investment, where you're like, it's not necessarily like I just want your funds. Is okay, trust the product and I'll give it back to you somehow. Not just on revenue,
I'll give you
but
I'll
also
give
on
you
an engagement.
what we would call a benefit or some advantage, some discount. All of those things you're saying can be built into the tokens and into the blockchain.
Yes, because the beauty of the token is its name. It's fungible. And when something is fungible, yeah, yeah, right. It's perfectly understood.
Which means changeable. It can change.
Exactly,
Yeah, which is why
exactly,
an NFT is a non-fungible token that can't change. That being the difference.
exactly.
Well, Edwin, this has been fascinating. We could go on forever, I'm sure, and we'll have to do this again because things are changing so fast. Particularly after you bring that. I guess it's the tokenization of a company. You're not bringing them public. You're not, raising funds in the traditional sense, but you're creating value and helping them finance the company through the tokenization of their assets, advantages, benefits, and so on. So that's pretty damn interesting, and we appreciate you sharing all of this with us.
Thank you very much, Michael, for the invitation. Lovely to speak about blockchain innovation and hopefully the future, because I believe this is
Yeah.
really gonna start moving
Well,
more fast than we think.
thank you, Edwin. And it comes at a time when the blockchain and this technology is taking a pretty big hit, but that it's gone way down doesn't mean it won't go way back up again. We make no predictions, but it's certainly fun to
Exactly.
watch. And this has been the Accelerator with Michael Conniff. That's me here with Edwin Mata from Bricken talking about tokenization. And we will be back with more podcasts before you know it. Thanks for watching.